Welcome everyone to this QUA Me In live demo training today brought to you by QUAcademy. The QUA team is offering these free weekly workshops to anyone interested in beginning or accelerating their path on crypto investing. My name is Eliza and I am one of the founders of QUA, which is the next top charity token on a mission to make an impact combating food scarcity and economic crises worldwide through education and the QUA community. So to start, I just want to note that I am not a financial advisor. So everything in this video is for education and entertainment purposes only. Should you feel the need to talk to your financial advisor, please do before making any big investing moves. But let's just get started. So our topic today is slippage. So what is slippage? To put it simply, slippage is the difference between the expected price of a trade and the executed price of a trade due to volatility. So difference between executed versus expected. So why does it happen exactly? So slippage happens when traders have to settle for a different price than what they initially requested due to movement in price between the time the order enters the market and the execution of the trade. So slippage happens in Forex and stocks too. However, it's more frequent and a little bit worse in crypto markets just due to the high price volatility. So for alt tokens specifically, like QUA, who commonly suffer from factors of lower daily volume or liquidity that fluctuates, this may also contribute to slippage due to the volatility that results from that. So slippage by itself, it's a pretty simple concept, but how it actually melds into the crypto world and how we utilize it and how we use slippage tolerance is pretty specific. So we want to get into exactly what that looks like. First of all, being the two different types of slippage, right? So there's positive slippage, which is a actual, I'm going to mute some people. The positive slippage is if the actual executed price of the token is lower than the expected price for a buy. So it's considered positive slippage. So since this gives the trader a better rate than the token price they originally intended, this is a good thing. That's why we call it positive. So this is a good thing for a buyer if you're placing a buy order. On the opposite side is negative slippage. So if the actual executed price of a token or coin is higher than the expected price of the order buy, it is considered negative slippage since the trader is given a less favorable position or rate than they originally tried to execute. So again, this is not a great thing for a buyer. And of course, the opposite would hold true for sellers. So if you get a higher price than expected when you sell, that's a good thing. And if you get a lower price than anticipated, it's not ideal for selling. So just keep that in mind that there are two different types of slippage when you're wondering which direction it's going, whether you're placing a buy or a sell order. So like I said a minute ago, talking about tolerance and how we kind of apply this slippage knowledge, right? So let's talk about some exchanges and how they factor for slippage using a standard term that we all know called tolerance. So some exchanges or trading platforms, I'm going to mute everyone here. Some exchanges or platforms automatically calculate and impose slippage tolerance on orders, and you agree to accept the slippage during the trade. So whether it's positive or negative, you agree to that. A simple example of this is through Proofcoin, which is a streaming charts DApp or decentralized application for Binance Smart Chain tokens. But you actually can trade on Proofcoin as well. It's not just for charts. And we'll have another trading regarding Binance Smart Chain and how it differs from other blockchains in the near future. But first, let's look at Proofcoin really quick. So on Proofcoin, once I've looked at my token, so we're using QUA for this example, and you've got your wallet connected. So I have my MetaMask wallet connected in this case. You can click trade. I'm just making sure I can see everything here. Yeah, you can click trade. And Proofcoin shows the slippage as one of their main options on their trade pop-up. This is a little bit different from PancakeSwap where you kind of have to go searching for it. But on Proofcoin, when this trade option pops, you see that the slippage is automatically filled in here. And it's defaulted to 10%, so auto slippage. Proofcoin is saying that this is their standard tolerance that they're providing that should allow this trade to go through efficiently. However, if you always still have the option to change the slippage tolerance to a higher or lower percentage before sim trade. So for example, in case you want to increase your slippage tolerance to ensure an efficient, successful trade, you could increase it here, but 10% is usually a pretty decent option, specifically on Proofcoin. It does change a little bit for PancakeSwap, but we'll get into that in a second. On PancakeSwap, it's a good example of a popular exchange that expects significant slippage, and therefore it occurs at a higher tolerance on all trades due to large prices, increases or decreases that happen during the trade. So depending on the token that you're trading, you can usually see an average of around 12% slippage on PancakeSwap required to facilitate an efficient transaction. Otherwise, you may get hit with a warning message saying that you can't actually place that transaction, which we'll look at in a second. So that is Proofcoin, though. Just kind of an example that a lot of people don't know. This is used for trading as well, and it's actually pretty simple to hook it up to your MetaMask or other, wallet and get a quick and efficient trade in if you aren't super familiar with other exchanges like PancakeSwap, which is what we're going to go into now anyway. So updating and troubleshooting on PancakeSwap. This is going to be kind of short and sweet, but it's something that we see a lot of issues with. We just want to touch on it so that, hopefully in the future it'll help you whether you're trading with QUA or trading with another token. So as stated before, some exchanges already factor in slippage tolerance that you agree to and can automatically trade based on the token in question, but that tolerance is usually adjustable regardless. So here's an example of me trying to trade BNB for QUA on PancakeSwap. So we'll show you how to navigate and trade on PancakeSwap in another video also, but today we're focusing just on slippage. As you can see, I've connected my wallet, so it shows my wallet balance here. I've chosen the amount of BNB I want to use for QUA to buy QUA, and I'm about to process this trade. So you'll see that even if I have plenty of QUA, the price impact, which you can see down here, is not too high. It's also shows you it's green, so it means that it's okay for us. And everything else looks okay. You still may get an error message. So let's try to complete this swap really quick and confirm swap and see what happens. So I'm popped up with this error message that says, transaction cannot succeed due to error, cannot estimate gas, transaction may fail, or may require gas limit. Kind of vague. This message kind of appears to be a warning, but it does actually prevent your trade from initiating or going through. So when you see this on PancakeSwap, it's most likely because you need to adjust your slippage tolerance to accommodate the high volatility of whatever token you're trying to buy or sell. So to do this, it's really simple. You go to the settings section right above where your trade is about to take place. And here is where you see your slippage tolerance. So on Proofcoin, we saw that it was right within the trading pop-up that came up. On here, you have to go searching for it just a little bit to know where the slippage tolerance settings exist. But it is here under the settings within the trade. The default for them is 0.5%. As we said before, 0.5 is going very low compared to the average of 10 to even 12% that we see normal, small exchanges, or if you're trading an altcoin or something like that, usually a little bit more volatility and you need a little bit more slippage tolerance. So for the purpose of this, we're going to change this to 12%, which is what I've been most successful with trading on PancakeSwap, and what most people can agree is pretty safe bet to have your transaction go through smoothly. So once we change this to 12, we can just exit out, and this will save our option. And now if we go back to swap, nothing else has changed, just that slippage tolerance. We'll go back to swap and confirm swap. And this should allow this transaction to go through successfully. And so we don't have to wait around for this to happen. But as you can see, we didn't get a pop-up, we didn't get a warning message. This transaction should go through once I go back and confirm transaction in my wallet. So that on PancakeSwap is just a really easy kind of troubleshooting technique. If you're faced with those type of errors and you don't really know what it is, it could be because of slippage tolerance. And sometimes you learn the hard way, but hopefully this is a little bit easier. So while these were just a couple examples of where and when you can expect to see slippage in action and have to accommodate slippage tolerance to allow you to trade, I hope they gave some insight and quick troubleshooting techniques to allow you to trade more efficiently in the future, especially if you're just starting out and haven't seen a lot of these issues or errors before that you might have to circumvent. So again, we'll have so many more trainings around these useful topics to help you feel more confident with your crypto trading, but this is just kind of a good way to get you started. And if you're playing around with stuff and see those error messages, just think Slippage. And that's what we just went through, troubleshooting and slippage on PancakeSwap. So that is a wrap for Slippage 101. Thank you again for all joining today and taking the time to learn these kind of unique areas of the crypto trading world. All trainings are recorded and will be posted on our website and our YouTube for you to go back and reference. And these QUA Me In trainings are presented by the QUA founders every Thursday. So don't forget to follow us on social media and join our Telegram to stay up to date on announcements for QUAcademy, as well as the QUA token, where we announce burns, handouts of free stuff and merch and all that good stuff. So definitely get on our Telegram to join the fun. And all of our social links will also be provided in our video description. So if that's all we have and nobody has any questions, I'll let everyone go. And thanks so much, everyone. Have a good one.